Welcome to our overview of legal trends in the oil and gas industry. The market continues to evolve with new entrants, new deal techniques and new sources of finance. In this brief video, my partners Will, Craig and Nina will discuss trends from 2017 in terms of deal types, financing sources and continuing disputes, as well as what to look out for in 2018.
It's certainly been one of the busiest years that we've seen for oil and gas disputes. It sounds like a cliche, but of course that's been largely driven by the low oil price. Budgets are therefore tighter and states are having to fill gaps in those budgets, often by trying to extract additional value from IOCs, and that often manifests itself through tax measures, through environmental measures, cost recovery audits. That's in turn fed JV disputes, issues around whether the operator is benefiting from its position, issues around country exits in some cases, and more default and forfeiture disputes than we've perhaps become accustomed to.
So one trend I would highlight is the increase in M&A activity. Between 2016 and 2017 we saw a jump of 50%. If we compare the first half of 2016, where global M&A value was around $87 billion US, and then compare that against the same first half of 2017, where we jumped up to 137 billion US. But this relative stability has given some confidence, and that's been helped by things like the OPEC production cuts, but we still have some uncertainty around the US and some of the non-OPEC countries.
Some of the trends that we've seen in the financing market in 2017, and I think driven by relative stability in the oil price, although it has been edging up, include a greater use of alternative financing sources, so not just conventional bank debt or using the debt capital markets, but also streaming, structured financings such as prepayments and pre-export financings. The relatively high but still stable oil price will allow new E&P borrowers to come to market as well. And of course there's been great success with refinancings. And in my view the standout from last year was Tullow Oil's refinancing of its reserve-based loan towards the end of the year.
Looking ahead in 2018, we'll see a continuation of the types of disputes that we've seen in 2017 to some extent. One is climate change litigation. We've seen a number of cases in 2017, notably in California and in Germany. Those cases face a number of challenges legally, most particularly in causation, but there are other risks that IOCs must have in mind and, in our view, should proactively seek to mitigate. There are risks at the reputational level, issues of political risk, and of course issues around community engagement in the communities in which IOCs operate. The other area that we see as likely to increase in scope and coverage this year will be decommissioning related disputes. We've already seen some of those in the vanguard, but we'll see more of this, anticipating the shortage of resource that's available to accommodate the decommissioning that's coming.
In my view, businesses in 2018 will be looking out for more of the same as in 2017. Hopefully a relatively stable oil price. I think as shale production in the United States comes up, that should be possible. Much will depend on the OPEC-Russia cooperation agreement. But assuming that the oil price remains broadly stable, we'll continue to see private equity-backed M&A and new money financing supporting that. Existing borrowers refinancing successfully. We'll continue to see the use of alternative financing sources, so potentially royalty payments, perhaps taking a leaf out of the mining industry's book. We'll certainly continue to see structured finance arrangements being put in place.
The oil and gas industry has always been very good at working with partners to share out the risks and also make sure that each company is making the most of its respective strengths. But I think we'll see some new partnerships emerging, increasing emphasis on gas, on LNG, gas to power. And I think we might now see some of those individual local content vehicles and local companies coming together to form new partnerships. The oil and gas industry has always been very good at embracing technology. We look at the huge advances they've made in terms of the deep offshore or shale gas. I think the next big challenge is how do they embrace innovation, digitalization, things like big data, Internet of Things, blockchain, to try and further that sort of drive for efficiency, but also develop new products for their clients. So I wouldn't be surprised if we see some new tie-ups there as well.
We've heard that challenges remain, but there are grounds for renewed optimism. In the last 3 years, the industry has demonstrated its resourcefulness, by designing new deal techniques and by deploying new sources of finance. We are proud to sponsor International Petroleum Week in 2018, and we very much hope to see you there.